U.S. stocks, they fell on Wednesday night on news that some Greek banks are facing emergency funding needs. In fact, minutes from the U.S. Fed April meeting as well showed that the U.S. economic prospects may be now sobering. Data showed that U.S. industrial production posted its fastest growth in over a year in the month of April. And the trend also suggests a rebound in U.S. housing, which is gaining some traction. On closing bell, the Dow closed about 33 points lower. The S&P 500 index was down 6, and the Nasdaq Composite shed a good 20 points. In fact, Federal Reserve policymakers in the minutes of the April policy meeting have stated that they are open to stimulate the U.S. economy if growth falters to threats or escalated threat levels. Several members indicated that the additional monetary policy accommodation could be necessary if the economic recovery lost momentum or the downside risks to the forecast became greater. Now, the Fed remained sober about the economic prospects. However, members said that the economy had been expanding moderately and generally agreed that the economic outlook was broadly similar to that of their March meeting.
Look at Asian markets. I guess that is what traders want to hear, that the central banks are open to more monetary stimulus, which means if U.S. economic data or if global uncertainty persists, the Fed is open to QE3. Now that for sure is having an impact on Asian markets. Hong Kong is firmly fixed in the green, 99 points for Hong Kong. SGX right at the top of your screen, 4864. What about global volatility, crude and other metal prices? That's Kospi for you, followed by China, which seems to be bouncing back from the day's low. Dollar index has corrected, but still above 81. Global volatility is now looking dangerous, 22. Like I've mentioned previously, that anything north of 20 for global volatility or CBOE VIX, that's always very dangerous. Let's check in on gold and crude. That is important because it's not about risk on or risk off. Currently, global money managers are just throwing away everything, starting from bonds to precious metals, emerging market equities, and developed market equities. So we may use fancy phrases like risk on or risk off, flight to capital, but the bottom line here is that there is outright fear, and when there is outright fear, there are only two safe havens in which global money managers they like to hide. Number one, U.S. Treasuries, and second, it's U.S. dollar. John Dunham, managing partner with John Dunham and Associates, joins us live from New York now. John, morning. Thank you for joining us. John, what do you make of comments from U.S. Fed? Looks like U.S. Fed has indicated that they are open to QE3.
The U.S. Fed seems to be open to any kind of monetary stimulus that they can think of. I think it's probably not a great idea, but that is what this Fed has kind of historically been doing.
John, if global central banks, if they decide to print more money, do you think that could be a short-term positive but a long-term negative?
I think you might get a short-term boost from it, but right now there's a huge amount of liquidity out there that, particularly in the United States, banks are literally sitting on large amounts of cash right now, and there really isn't there's not a whole lot that more monetary stimulus is going to do to make the economy better. The economy has to start getting better on its own. It has to start growing from productivity.
John, hi, morning. What is it that you're tracking by way of fund flows? And because of the development in Greece and the kind of market shake-off that we've seen in the last few trading sessions, are you seeing any redemption from either the emerging market lot or some of the European markets?
Well, you've seen a lot of I think you just mentioned it, a lot of flight to dollar-based assets, a lot of flight to treasuries, to just dollars right now. And I think that's reflecting some of the concern about Greece in particular. But also, there's a lot of unstable areas in the world right now. Russia's fairly unstable. Argentina, obviously, large parts of Venezuela, places like that. The Greek thing, I heard a fund manager today say that if Greece fails, it's kind of like everyone in China taking a long lunch break. It's not that big of an economy, but it does lead people to worry about where their investments are.